Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering key levels on the higher time frame, specifically the monthly and weekly on MINA. Now, as always, our key level criteria is what we look for, and we want to look for swing highs and swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So as we can see on the chart, we do not have a lot of data that we can really work with. So we're going to do the best that we can. And the first thing that I notice is a swing high. So let's plot a monthly level. Now on this chart, we can see some sort of reaction at this level, but we don't have enough data to really confirm anything. So let's hop down to the weekly and see what we can find. Now, here in the weekly, what do we notice? Well, we can see that price came up and reversed and reacted to this key level, went up and reversed. So let's plot a key weekly level. As we see, candles came up, reacted, and reversed. Candles came up, reacted, and reversed. So our monthly level and our weekly level are in similar areas, but in order to determine the strength of a level, if we go back to the monthly level, this is quite a key level. As price came up, these wicks came above the key level, reacting to our weekly level as well, but we had a strong bearish candle off this key monthly level. So let's go back to the weekly. Now over here we kind of have our levels plotted. We can see a top and another top forming a double top at this key level, which is a key reversal pattern. As we can see, price comes down. Now as price comes down, we see that it first finds a level of support here, which we see a reaction to. And what we do notice, if we look to the right, we see another reaction here, and we see another reaction here. So let's go ahead and draw in a zone. Make sure we color coordinate it for the weekly level. And we're just going to extend this away from price. So when price revisits this level, we are aware that this is a key level and price may react to it. Now, what else do we see? We see that price came down, and reversed drastically from this level, which is an obvious swing low that anybody can see looking at this chart. So let's go ahead and plot this key level. We do notice that right here, price made a little bit of a reaction, but broke right through. So key levels don't always work. How do I say this? Key levels are areas where price can react to, as they have been reacted to in the past. But it does not mean that price will react in the way that you expect. Price can stall at a key level and break right through, as to why we want to wait for confirmation of our bias reaction. So if we go down to our most recent price action, we can notice that price is sitting below this level here, which we still have a wick that went lower. So what we're going to do is draw in a zone. Now we can see that price came down with this wick and we still haven't broken those lows. So we are actually still at a key level of support. But if price reverses from this level, what we do see is a key level of resistance right here as to our reaction from a long wick and a bearish candle here, bearish momentum candle. So let's reset our chart and see what we got. Now, based on the data that we were given, which is not a lot on this chart, these are the key levels that we were able to find. Now, as price reverses from this level, if it reverses from this level and comes up, we have key levels that we can expect a reaction from price. I hope you guys enjoyed this video, and if you got any value from it today, please hit the like button, hit that subscribe button as well, and I'll see you in the next video.